All right, glad to have you back. We'll stay with our discussions around inflation for the month of August. And my guest is Managing Director, Financial Derivatives Company Limited, Mr. Bismark Rewane. Thank you so much. It's good to have you join the show this afternoon.
Good afternoon, and thank you for having me.
Yes, I read through and I saw that your projections, if I'm correct, from FDC was inflation would moderate to 21.4%, if I'm correct, for the month of August.
That is true.
Yes, but we have 20.12%.
Yes, the magnitude of the decline was surprising and beyond all expectations. But what is important that, like I said, the trend is your friend, and therefore the trend was directionally, everybody was right. But in nominal terms, it was this was a surprise, what we call the August surprise.
So what are those fundamentals, or what fundamentals do you think is driving this drop that we see significantly this time?
Okay, let me approach it from three different perspectives. One is that there was a reconstitution of the basket sometime last year. So if you are comparing, you have to compare oranges with oranges, not apples with oranges. So if the rule of the thumb is that if you add 10% to the new rate, then it will bring you back probably to the old rate. Therefore, if it's 20% now, if you add 10 to it, it means if we're using the old method, we would have been at 30%. But 30% is much lower than 33%, which was the previous high. So even whichever way you look at it, the inflation trend is moderating, and that is good news for the economy. Because once inflation starts to moderate, it means that the store of value, quality or characteristic of money begins to playing for the policymakers and the consumers and everybody in the markets. So one is, how much is this reduction in interest rates and in inflation rate as a result of the reconstitution of the basket? Quite frankly, it had an effect, but it was not all of it. Therefore, that is number one. Number two is, what are the factors that are leading to this level of disinflation? One of the key factors is that in the last 12 months, particularly in the last 12 months, Dangote Refinery has brought down the price of PMS 8 times and brought it up 3 times. So generally speaking, at this time last year, it was much more expensive. It was 250 naira more expensive than what it is today. It was about 1,150. So that is one significant factor. So it brings down the logistics cost, it brings down the cost of transportation, and it also brings down the cost of powering your small generators. So we had that last year compared to this year. At this time last year, the exchange rate was 1,625. At this time this year, we're talking about 1,540. In fact, right now it's about 1,527. But we are talking about August. So if you look at that, you will find that it's almost 100 naira appreciation of the currency relative to last year. So currency appreciation, 1. 2, drop in the price, decline in the price of petrol and diesel. And then 3, more than anything else, the interest rates have held high. So what we are seeing is that the marginal propensity to save was higher, while the marginal propensity to consume is lower. Now, let us take it and look at specifically. Food inflation. Food in the basket last year was 54%. Now food is about 44%. Now, if you take the items, and I listened to the director of Chapel Hill talking about those items, specifically, at this time last year, just going towards Christmas, the price of a bag of rice was over 105,000. Today, it's at 80,000. So there is a 20% decline in the price of imported rice. If you look at plantain at this time last year was 9,000 to 10,000 naira. Today, the small bunch is 4,000 and the big bunch is 6,000. And that's very, very important to understand. We look at beans. Beans are skyrocketed, and now it's down. The beans is now down to 75,000. It's flat, 75,000. While pepper is at 50,000. When you look at all of these things put together, so we've had garri down, we've had pepper down, pepper is down, beans is down, and tomatoes also down. Tomatoes are at 70,000. So generally speaking, if you take a synthetic basket of goods in the market, you find that compared to last year, what has happened is that the pace of increase of prices, right, has actually slowed. And in some cases, because of the harvest season and impact, we've seen prices actually decline. But after the harvest and prices come back to normal, then you will see that people have to deal with it. So what it does mean is that the intervention of government here, there are three things that people spend their money on mainly: food, housing, education, and the fourth one is actually healthcare. So if the public hospitals are doing well and people are spending less on healthcare, plus the HMOs, the health medical schemes and insurance schemes are doing that. Two, if the productivity in the farms has actually increased because of good use of fertilizer and all that, it all depends on how the government, state government, federal government, and private sector employers, actually begin to multiply the multiplier effect on expenditure and investment to increase income and improve the welfare of people. That is the key to this whole thing. So, so that we don't confuse issues. There are market issues, there are policy issues, right? And then there are revenue issues, which is part of the policy program.
There are market issues and there are policy issues. Now, in that same report that highlights your projections for inflation, FDC is expecting MPC to cut rates, even if it's just by 25 basis points, to complement the stimulus and, of course, of the fiscal authorities. Are you expecting that to happen in this next meeting?
Yes, we expect that. Why do we expect that? I listened to the... we expect that. Why do we expect that? I listened to the other speaker just now talking about the fact that it may be too soon. If not now, when? And if not us, why not us? No, the reality is this. The US Fed is going to push down interest rates tomorrow by 25 basis points. Our inflation rate has come down to 20.15. The US inflation rate has actually increased to 2.9%. So the interest rate inflation differential is in our favor. Therefore, if the US interest rates come down by 25 basis points, we have an opportunity also to bring down our, and that will not lead to a reversal of flows by the portfolio investors. No, it won't lead to. As a matter of fact, even at current levels, we are going to be seeing an inflow. So I don't worry about that. But it's important to note something, that the federal government and the state government's borrowing is tied to the MPR. If you bring down the MPR by 25 basis points, right, you actually reduce the debt service burden of the federal government and state governments. And what does that do? It gives the state governments and federal government more money to spend on programs that will benefit the people rather than paying interest to investors. So, and that's why I think a 25 basis point cut now, and in November, another 25 basis point, making it 50 basis points, will be helpful. Now, we expect that the US Fed cut 25 now and cut again in October by another 25, if all things being equal. If the price of oil reaches at $6, $7 a barrel, the expectation of that price of oil will be maybe as low as 60. But at 67, and our production is up, right? If you add condensates, we are at about 1.7, 1.8 million barrels. Then our revenues are strong enough to support the government's initiatives in trying to bring succor to the people. So, we talk about the transmission lags between when you have policies and when the impact is felt, and transmission lag between when the impact is felt and when people believe that it's going to be sustainable. So, generally speaking, it's an interesting development, but the problem has to be resolved in a way that the people can begin to feel the effect, because, like I said last time we were discussing, happy statistics and unhappy people is not the. We want happy statistics, happy people, and hopeful people at the end.
And that takes you to my next question. Yesterday, I spoke to Mr. Sunday Dare on this show, and I asked him about interventions, fallout of these reforms. We call them bold steps, bold reforms. What, in your understanding, Mr. Rewane, would you say that government has planned so very well for the fallout of this, for the vulnerable ones, as the fallout of these economic reforms undertaken by President Bola Tinubu?
No, I think the policy is one thing, the efficiency of the intervention is the other. So generally speaking, the policies are not bad. But the way it's being managed and intervention to make sure that it gets to people, right, is the key thing. So that's a management problem. And therefore, we always say policy is stage one. Stage two is institutional reform to ensure that there's efficiency in the system. And third, step three is to ensure that any deviation or any lapses or any criminal acts of fraud and diversion should be punished, and it should be very well publicized. So, because we always hear of this, that, and the other, but we don't hear of people who have been indicted because they diverted monies and resources that are meant for the people to their own private pockets. Nobody says you can do whatever deals you want to do, but ensure that you do not deprive the people of what is due them, especially because on one hand, they are paying taxes. On the second hand, they are paying more taxes because subsidies have been removed. And thirdly, you now say you should have your tax identification number. If not, you'll not be able to operate your accounts. All of this means that the tax and revenue mobilization is efficient. President alluded to the fact that even without NNPC, the government has met its target in terms of revenue generation. Now, how is that revenue being spent? And how impactful are those revenues on the people's lives? That is the issue. It is not the policy. It is the implementation, one, the effectiveness, two, and the fact that if people divert these things, then they're not indicted and brought to book. That is the issue.
Finally, before I let you go, the target, according to the federal government, is to get to 15% inflation rate, I think, by the end of 2025. Many say that looks like a tall order. That's on one side. There's also a focus on the $1 trillion economy, and we see the banks running. It's about 6 months to go by March 2026. All of these are concerns for the business community. I don't know how this comes to you and what you think. What are the impacts of all of this? What are your prospects with regards to this?
I think it's good to aspire, right? 15% this year is not going to happen. I think it's going to happen maybe sometime in 2026 in terms of inflation during that. So, and it's not a sprint; it's a marathon. So I have no problem with that. Once we address the productivity issues, one, two, the most important initiative of the government is reforming the energy and power sector. The president has approved, and the DMO has actually going to issue bonds to grant some forbearance to the energy sector, the GENCOs and the DISCOs. When you achieve that, for every 1,000 to 2,000 megawatts, 1,000 megawatts, an increase in power, it increases the GDP by about almost 0.4 to 0.5%. If you go 2,000, you are increasing GDP by 1%. If you go to 4,000, you are also going to increase in multiples. That is the major thing. Therefore, you are spending less on electricity, you are spending less on diesel and your generator, and you are producing more. So that is the first thing, right? The second thing is that the federal government has to now focus on ensuring that people, that security and security in the areas, the food baskets, and the highways and all of that are properly it's enforced, and so that people feel safe to produce and take their goods to the market. And finally, the Highway Development Management Initiative, now, which should have kicked in since 2019, 2020, only one of the concession roads have been handed over to the concessionaires. The Minister of Works would have to sit up and ensure that those roads are handed over to the concessionaires so that they can start building, employing people, and that will reduce the cost of transportation of goods across the country. I think that's very important. So three things: one, power overall; two, ensuring that there's security along the highways; and thirdly, the Highway Development Initiative. All of these things will lead to lower prices of goods, higher production of goods, and more than anything else, making sure that wealth is transferred from government to the people, and also to deal with the poverty issue in the country.
The tax laws, finally, that just came on me. The tax laws, January 2026, we expect implementation. We've already seen a pushback with regards to the fuel tax, where that's been on since, according to research, it's been the Firmer Act and all. But what do you make of the implementation, considering a pre-election year? I like your views on that.
Well, taxes are definitely important. and they must be collected. But the most important thing is, what do you do with the tax you have collected? Taxes increase revenue, but investment increase growth. So you must do something. If you don't deploy those taxes in a manner that is visible to make people won't believe that they are paying taxes and they are getting value for their money, then you will have a problem. And it's extremely important to know that the people are sensitive, right, to the fact that they must see the value for which they are paying money. And another thing that comes to mind, and we note that the cost of collection of taxes has been very high. We have to bring down the cost of collection of taxes so that the net effect of the taxes in terms of government purse is felt, the revenue increases, expenditure increases, investment increases, and growth increases. That is the way to do it.
Mr. Bismark Rewane, thank you so much for your time. It's good to have you here, Managing Director of Financial Derivatives Limited. Enjoy the rest of your day.
Thank you very much for having me.
Thank you so much.